Witnessing the hammer signal that formed in the Dow today is more relevant than just a reversal signal based upon where it occurred. Notice how there's a support level right here, and now we've got a hammer signal, which is one of the 12 major candlestick signals, that reveals that there's a strong probability that this is where the bulls stepped in. Now, like any candlestick reversal signal, bullish confirmation is required. So when we wake up tomorrow and see the pre-market futures might be trading positive, it's a good indication that this level right here acted as support, and now the sideways channel is the predominant trend indicator. Although the NASDAQ didn't actually do a reversal signal, it shows some bullish trading in conjunction with the Dow, right at the same level that could be a support level. Once again, the combination of these two indexes, the Dow and the NASDAQ, as well as the S&P 500, are all showing that there was buying today at a very major support level. As can be seen, even in the NASDAQ, a big down day, an up day, a down day, an up day. Now, the overall trend obviously is down because it's still trading below the T-line. When market conditions are in this state, the Japanese rice trader still has the advantage of finding patterns that are going to work no matter which way the overall market trend is moving. For example, CLVS. You can see how it came up, resisted at the 50, pulled back to the T-line, now coming back up through the 50. This is what we call a bobble breakout. It's where they've come up, they're bobbling, they're showing support. Now when they come back up through the resistance level, it produces an extremely high probability that the next move or the next wave to the upside is in progress. This way, the candlestick investor can evaluate where that next target might be by analyzing what everybody else will be watching on a chart. For example, there's a gap right here that makes this the first likely target, which would also correspond with the magnitude of this move right here. Knowing what human nature usually does, the identification of a bobble breakout potential allows the investor to be prepared for buying on positive trading that breaks through that resistance level. For example, in Wayfair, after the piercing signal moves up to the first resistance level, there's your hanging man in the overbought area. Trades lower, that's when you take profits. Now you can get ready to buy on a high probability trade based upon it trading above the 50-day moving average, which will essentially be a J-hook pattern, but much more defined based upon knowing exactly where it was tied to take profits, where the support was, and when the buying was continuing. But the most compelling underlying factor of a trend, as we can see in Tesla, even with the market selling off as hard as it has over the past few days, there's one factor about Tesla that can easily be seen. They couldn't close it below the T-line. As long as prices are trading above the T-line, it tells you there's a high probability the uptrend is in progress. That'll be it. We'll see you in the chat room.